Welcome back to Accrued Interest. Today, March 3rd, 2025, I'm going to build off of an earlier video where I told you to ignore the short attack on AppLovin and hold the stock with some new information that came out late Friday and over the weekend on how the company is fighting back. As always, before we get started, everything said on this podcast is for entertainment purposes, as I am not a registered investment advisor. AppLovin was all over the news last week as a number of short sellers came out with some scathing reports that caused the stock to tank over 20%. Well, AppLovin decided to fight back in the best way that they knew how. They decided to use large piles of cash that they had to buy back their stock and show the market that they truly believe that the intrinsic value of their company was less than what it was currently trading for. At first, this news may have been easy to miss because the company didn't actually put out a press release saying that they were going to be changing their stock buyback. The news picked up reports of the change in the buyback rules by going through the company's SEC filings, particularly an 8K that was filed on late Friday evening. Here at Accrued Interest, one of the rules that we choose to live by when doing our research is NR. We assume that nobody reads the documents. Not reading documents has not stopped millions of investors, companies, and even CEOs from running their businesses. At Accrued Interest, we want you to be the best investor that you can be. So here, I am going to read the documents so you don't have to. To stay on top of 8Ks, I recommend setting up Google alerts on whatever company that you want to follow, or you could just periodically go to their SEC filings. These documents are usually pretty technical in nature. They might not have a lot of fancy charts and graphs. For example, in the 8K that was dropped on Friday afternoon, you had to go to item 8.01 other events to get about 3 paragraphs of all this verbiage right here to tell you what changed. The company announced they were going to make available up to $500 million to be used immediately. In the past, there was a quarterly limit that the company could only buy back as much stock as they had generated free cash flow in the prior period. Now that limit is gone. Secondly, going forward, the company will make a rule that the buyback limit will go up each quarter on a cumulative basis, so they can deploy money even faster than they did before. When this news first dropped, you could hear the doubts from the skeptics. Many people on Twitter were saying, look, an additional 500 million is not that much. 500 million is just a tiny drop in the bucket for a company that now has a market cap north of $110 billion. A point you have to remember from the prior video is that AppLovin converts a very high percentage of its EBITDA to free cash flow. That means that AppLovin is able to generate more free cash flow per dollar than many of its big tech peers. If you go to page 46 of the 10K that they also dropped, you can look where I highlighted here that the company did a little over $2.7 billion of EBITDA last year. Next, on that same page, in the annual report, page 46, you can see AppLovin generated approximately $2.1 billion of free cash flow. Since AppLovin went public in 2021, they have bought back about $2.5 billion worth of stocks. Approximately 64% of all the free cash flow the company has made since 2021 has been returned to shareholders. And a point that I made in the prior video was that each year, AppLovin turns more of each dollar they generate into revenue into free cash flow. In 2024, approximately 76% of the $2.7 billion of EBITDA that AppLovin made was turned into free cash flow. Since IPO, over 64% of all the EBITDA has been turned into free cash flow. AppLovin has been very aggressive since the IPO 4 years ago in shrinking its share count. At the bottom of this page, I laid out the diluted shares outstanding and how they have gone down since the IPO. Last year alone, in 2024, AppLovin retired approximately 4% of the shares outstanding. The years before that, they retired approximately 2% of the shares outstanding. Ever since the IPO, the company's shares outstanding has remained flat, despite the fact that they have issued lots of shares to employees for compensation. What this shows is that you want to stay long AppLovin because one, the company's continued stock buybacks is going to put support in the stock in case it falls any further from the current short reports or new ones that might come out. Remember, AppLovin is a rare high growth tech company that actually has slightly fewer shares outstanding today than it did when it first went public. And while this is not central to the thesis, by the end of the week, this Friday, it's very possible you could wake up and hear that AppLovin has been added to the S&P 500. As always, thank you for listening. You should stay long, and if you want to stay on top of further updates on this company, please don't forget to like and subscribe and come to my YouTube page.